All right, and so we're going to go over the Trade Genius approach. Primarily, we are going to build up a long-term Bitcoin holding. So we're going to go over the whys of that in our investment strategy.
Trade Genius.
All right, so why Bitcoin? I want to go over these points because as an investor, you want to understand fully what you're investing in, and you also want to have confidence in what you're investing in. So going over these points and hitting home why Bitcoin is here to stay, I think is very important. Some of you may already know some of these points, but we want to get everyone on the same page. So first and foremost, Bitcoin has been accepted as Gold 2.0. This is a superior store of value. And as its role as Gold 2.0, it's very early in the adoption phase. So we have a tremendous amount of upside, a lot of money coming into this space. Due to the design of the blockchain, it's unhackable, it's counterfeit proof. So you can't double spend, you can't make a copy of a Bitcoin. Only the network recognizes Bitcoin that has been made by the Bitcoin network and held in wallets on the Bitcoin network. If you try to monkey with that code, it won't work. It is decentralized. No single authority can dictate what it is or what it can become. It is an economically incentivized consensus-based network. I know that might sound like a mouthful, but basically what that means is everyone is incentivized to run the code that the majority want to run. It's that simple. And if they do so, specifically talking about the miners, they get rewarded every 10 minutes with a Bitcoin block reward. Currently, that's 6.25 Bitcoin every 10 minutes gets rewarded out to the various mining pools that solve the Bitcoin blocks. And when they solve the Bitcoin blocks, they are validating the transactions on the network. So having that incentive further enforces the decentralized model of Bitcoin. Decentralization prevents Bitcoin from being shut down. It'll be an integral part of the trustless payment systems and likely part of day-to-day life in the near future. So trustless payment systems have really not taken off yet, but they will. This is, you may have heard of the term DeFi or decentralized finance. And that is in its infancy stage. And likely Bitcoin will become a major player as a settlement layer for all of that. So most likely in the near future, our activities, payment activities, or even banking activities will probably interact at some point with these technologies, whether we know it or not. There is a finite amount. Only 21 million Bitcoins will ever be produced. This is hard-coded into the code. And as we discussed previously, people are incentivized to run this code. If this changes, it would require the majority of participants to decide that there should be more Bitcoins, but that would affect the economy, that would affect the mining revenue. This is why Bitcoin has value, because of its scarcity. Rate of production decreases every 4 years. Now, this is a disinflationary mechanism. So it was designed to control the rate of inflation, but it's unique for a commodity to have a programmed rate of disinflation. So every 4 years, the daily output gets cut in half. This is also known as the halving. So every 4 years, the production gets cut in half. Prior to the 2020 halving, 1,800 BTC were produced every day. After the 2020 halving, it's now 900. And approximately in March or so of 2024, that will drop down to 450 BTC per day. Also, approximately 4 million are assumed to be lost forever. This is through on-chain analysis and looking at Bitcoin that just have not moved for the better part of 10 years. And unless they do move again, they are assumed to be gone forever. In the early days, people would lose their keys to their Bitcoin wallets. And when you do that, you lose the ability to access those Bitcoins. So it's important to keep that safe. So as such, those are assumed to be lost forever. So really, we have about 17 million BTC in circulation, which makes it even more finite than it was designed to be. Another way to look at how finite Bitcoin is, if you look at how many millionaires are on the earth, I believe there's almost 50 million millionaires now on the earth. Even if they all wanted to have one Bitcoin, like they all came to the Bitcoin exchanges and bought as many as they could, not all of them could have one. And these are high net worth individuals that will typically have this type of high growth asset in their portfolio. So most of them will only see a fraction in their portfolio. So if you're able to own one whole Bitcoin, you're going to be in a very, very rare club on earth. Out of the 8+ billion people that are on earth, very, very few are ever going to be able to own whole Bitcoins. The institutional phase has started. The biggest example of this was when the CME futures came on the market. That was the end of 2017. But more recently, corporations have been adding it to their treasuries. Big banks are getting involved with providing services to their clients to gain Bitcoin and hold Bitcoin in their portfolios. Many countries have legalized Bitcoin either as an asset or as a currency, so government acceptance globally is growing. There's also more regulations too, and that's okay. I mean, for Bitcoin, regulations means acceptance. So you're always going to have that with governments. Otherwise, what you would see is probably outright banning of Bitcoin. Bitcoin is geopolitically neutral as it is decentralized. It makes for a better flight of safety assets, not tied to any one government. Bitcoin is not in a bubble. You hear that a lot. What you have to realize is that it's an asset class that is like no other. Due to a limited supply, the demand surges will force periods of episodic hyperinflation. That means you have these windows where price will spike pretty hard, pretty fast. But this gets mistaken by old school investors as, one and done bubble or the tulip bubble. But true bubbles require saturation. It's maybe 1 in 3 people you talk to in public have probably heard of Bitcoin. However, out of those, far fewer than 1 in 3 understand it, own it, or even use it. So the idea or the knowledge that Bitcoin is around has saturated the public's consciousness, but actual saturation as far as people owning it or using it or understanding it, we're very far from that. Mathematical models using the exponential demand growth rate and limited supply of Bitcoin projected to be worth over $1 million per BTC. The industrial use has not even begun yet. So we touched on this a little bit about how Bitcoin would be a settlement layer. That's the thing about it, the blockchain itself. So you have Bitcoin is the primary token of the Bitcoin blockchain, but the blockchain itself can have side chains or other side projects that run alongside of it, but settle back to it. And why they would settle back to it is because Bitcoin is the most secure, most powerful computing network on Earth. So think of it as an ironclad ledger, and you can use that for payments, record keeping, etc. So we haven't really even utilized the industrial aspect of Bitcoin's blockchain yet, and that's going to come. And then last but not least is the standard by which all other crypto asset values are measured against. So what that means is Bitcoin was the original crypto, then the altcoins came along, but altcoins really, unless they're gaining value against Bitcoin, long term, you're better off in Bitcoin as far as an investment vehicle. Most altcoins are going to measure the performance against the price of Bitcoin. And if they're gaining against the price of Bitcoin, then they're doing something that doesn't happen a majority of the time. So Bitcoin's the big measuring stick in the world of crypto values. Hope you enjoyed this video. Thanks for watching.